Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning. You know what? I'm not ready. Restart the thing. We got... No, we got it. Okay, guys. He's early. No, I am so late today. You know what? It always comes down to, like, I am eating these days. Anyways, how about that initial jobless claims news? Holy crap. Wait, so they came in at 233 versus 240 expected, and they sell off? Like, how much is that? 3, 7, 14. So almost half a handle. What? That is wild. That is a little wild. I think that the treasuries are just doing that because they're like, oh yeah, if initial jobless claims are less than expected, there's no way that they're gonna do an emergency cut, or maybe not a 50 basis point cut. You know, like, that is a really outsized reaction to that news. Quite the thing. Anyways, good morning, Octavius, Angel, Uzi, Jake. The charts. So here you got the treasuries. Okay, well, it is actually only just a little bit below yesterday's low because we did have a little bit of a rise overnight. And I do think that there is probably a decent amount of all of this back here that we could potentially... I circle it. Some of this. We might start retracing some of this. S&P 500. Well, they seem to be okay with it. So yesterday, well, I tell you what, man, yesterday was quite the ride. Because it started out okay, didn't it? Remember, they were like, you know, it's not that great of a day. But then I was like, yeah, but since we've been here, it's up like, you know, like 10, 20 points. That's not bad. And then, yeah, it just like totally creamed. Like the rally just completely short-circuited. But they seem to be liking this initial jobless claims news. I'm still kind of sitting here like, is that it? There's got to be something else to it. I don't know. Anyways, oil's okay. Gold and silver, okay, they're maybe making a recovery here, or at least they're the higher end of the range. Kappa, Japanese yen. So Japanese yen took that hit from the overnight comments. It's kind of been sideways since then. The action has been okay. I'm concerned that the Japanese yen turns into, hey, everybody, let's all short the Japanese yen again. You know, because that was a problem too. And we were vacillating between two big problems. Bitcoin having a bit of a jump there after selling off a little bit yesterday. So good for them. Interesting market. Man. Like, I'm having a hard time here. Like, that just seems so overdone. It makes me want to take the other side of it to buy the treasuries. But I know that, like, the larger flow here, that might not be a good idea. So I'm just going to sit on it for a little bit. Blow my nose here. That was one of the best nose blowings I've had in a long time. That felt good. Well, let me browse around Twitter and so forth to see. Mohammed A. L. Arian. U.S. weekly jobless claims came in at 233,000, down from a revised 250. A relief. After last week's unemployment and growth scare, the details of this data release will be subject to a higher level of scrutiny with a view to assessing breadth and other distributional aspects. All this with the important qualification that this high-frequency data series is inherently noisy. Having said that, markets are reacting. They are reacting. That is just such a big move off of that. Okay, 16 ticks or whatever. It's not 16, it's like 32 ticks, right? Off of initial jobless claims is just wild. Unusually high. Who is Bill Blue Line? With yield curve steepening, I imagine it helps drive demand for today's 30-year auction week. 30-year, 10-year yesterday, but 30s have gained about 20 basis points in the past month, plus some psychology to the 4%. I'm interested. Is a president of Blue Line Futures. Seems like somebody worth following. I think I will add him to the lists. Well, there he is talking with Jimmy Oreo. See, I don't know what's going on with the cool kids. I need to watch I need to get the CNBC Pro and just watch CNBC all day, huh? Or, hire a publicist to get me on those kinds of TV shows. Well, they are running into a bit of a hole at 24. I think it might be a little bit too soon for it to really get pinned, but it is probably going to slow down a bit from here, huh? So one of my new hobbies is to search for a type of item and try and screw with the vendors for that. So I'll go into a shop, whatever. I'm looking for something. Let's just say it's gym shorts, right? And then you get that little pop-up that's like, okay, here are the cookies that we have. Do you want to continue, or do you want to just only use the required cookies? And then I go, all of the cookies, yes. And then go and spend a ton of time looking at a specific item so that they start sending me emails about it and all of these things. And it's kind of funny because they really tried this one. Who is it? 10,000. Yeah. They're like, oh, look, you can take 10% off of any order. Act now, the clock is ticking. You have to give me more than 10%, bruh. You have to give me more than 10% because I already bought the thing that I need. Why would I need to buy more? Anyways, it's funny. I think it's funny. It's also a little bit infuriating because I'm like, why didn't you just give me the discount in the first place? Oh, you mean that you're trying to hope that I'm a stupid consumer and just pay more than I actually need to for it? I see the game you're playing. Okay. Nothing too interesting there. Let's see if Zero Hedge has anything about that. If this is the start of a crash, this is how Goldman is trading it. Okay, there is a thing about the continuing jobless claims, though. Surged to 33-month highs. And I go back, I don't game more than that. How come I'm not signed in over here on this? Well, let me try to fix this over here. Have you tried Sierra charts, Dom? Yes, I have. It was a long time ago. Not that a whole lot in that area has changed. But, you know, I messed around with it for a week or so. Like, my general conclusion is that it has all of the features that you would need. They've basically, like, they've looked at all of the other platforms and stolen every kind of useful feature that you would need. It's not organized very well. Like, that very much shows in the organization of the application, that they're basically stealing all of their features from other people. But it works, and it's pretty good. I don't think that it's as good as Jigsaw, but it works. It's pretty good. I also, another key thing to realize with Sierra charts is that they wrap up their fees together with your data fees. So, like with Jigsaw, you have to pay $50 a month live trading license. You still pay like $40 a month for Sierra charts. It's just that you might not realize it because of how it is bundled together with the data. So they're pretty comparable price-wise, actually. It's just that Sierra charts doesn't have an initial cost like Jigsaw does. Jigsaw is $500 first. Non-Rust rule. Dude, you're like 4 days behind, though. They were saying that last Friday. What would you say Jigsaw excels at? Oh my gosh, that's a really good question. So here's the thing that Jigsaw does that I don't think anybody else does as well. And it's actually like a really simple thing, but it matters so much. And that is your order entry. So with Jigsaw, with the way that I have my DOM set up, if I put an order down in here, it'll put a limit order. Let's move this a little bit out of the way. It'll put a limit order down there. If I click up here, it'll put a stop order. So it just automatically knows, oh, if I'm clicking here versus here, so I don't have to click a different button. The worst is in NinjaTrader. You have to go and change the setting first, and then you can do with the middle mouse and this sort of a thing. If I click on the inside, so like if I clicked there at 26, it will automatically submit a market order. Or I can just change this and say always be limit or whatever. I think if I do always do limit, though, does it still do the stops? I don't know. Oh no, it doesn't. It is a limit order. Anyways, there's also these stop volume orders. So all I have to do is put a number there in that SV. And then when I set the stop, see, it says one stop V300. So it automatically says, okay, it's not going to get triggered when it is the best offer or when there's volume going through there. There has to be less than 300 lots on the offer for my trigger to stop. And when you do that, you do run the risk of when they sweep that price, you get slippage and you stop out by one tick. But it will overall reduce the number of times that you get stopped out. So that's really useful. So I can come in here and I can manage really complicated positions with multiple levels and multiple contracts extremely easy. And I'm not saying that you can't do that at all on other platforms, but it just doesn't work as well. In Jigsaw, they really worked to optimize it so that it is just, I see the price that I want to put the order at and I click it and it does what I want. And that is the thing that Jigsaw does that no other platform does, that I think really, really puts it over the top. So again, it's like a really simple, innocuous thing that you would think that other people would do, but they don't. Jake, watching ES and NQ on the DOM, I see orders on the bid/ask that should print physically, or rather they are physically impossible to move, and price blows through and it appears as if they pull because what prints isn't even close to what's sitting there. Seems like there's legit light speed spoofing going on. Yes and no. So you're correct in what you're seeing. I wouldn't call it spoofing. Simply because the point of most of those orders is to reserve a spot in line. So basically, if you're a market maker and you're going to say, oh, okay, this is a price that's good, this is where I want to start taking fills, well, but I need the spot in line. So if I'm not always constantly putting bids out there whenever it ticks up and ticks down and whatnot, I'm not going to have that spot in line to be able to do what I want. So they get the spot in line, and then they only take the fills. They always cancel it unless it's one of those situations where their model says I should take the fills. And that's what's going on. So even here in the treasuries, when you look at it and there's like 1,500 on the offer or the bid or whatever, and they hit into it, assuming that there's not iceberging, probably like 2/3 of it cancels at first. Like usually what'll happen is 2/3 of it will cancel. But then in the end, you will actually see more than what was bid or offered actually trade, because as it trades, then more people decide I want the fill, right? People like me that are, only putting their orders in when they're seeing volume go through at that spot, right? So this is a really weird thing that I think can kind of make understanding and reading order flow difficult until you understand that most of the bids and offers are placeholders. Some of them will cancel, but then in the end, usually you end up trading more volume than that anyways, because there's a bunch of other latent liquidity that doesn't show up until after they start to see executions there. Make sense? That is a way to trade, by the way, too, is you can come in here and you can be like, we call it an alligator. It's like it just went bid there, 300 lots. Okay, so I put my bid there. Of course, I don't want it to necessarily execute right away. But now there's 805, so now maybe I could do it. I'm on a sim account, so we might as well. Look, now I'm 1,000 in line. And then, if I start to see, okay, too much trading there, I'm going to pull it because I don't want to take it when they clear through me, right? That's the alligator. And if you do it correctly, then what should happen is, maybe I was doing it earlier when it was up here. I was doing it on the offer. There's like 32.12 there at 25, but like I'm less than 1,000 in line. Then that means that if we come back up to that spot and I try and do arbitrage, I can catch a one tick there a lot more easily because I already have the spot in line. Alligator or crocodile. I guess it's better to call it a crocodile. Alligator, they talk about those moving averages that chomp and all that nonsense. It's kind of looking like they're going to go a little bit lower already, man. They're so close to 4%. I'm almost kind of wondering if it's worth taking a trade from 33.99 to 4%, just on the theory that they will tag 4%. But I guess we'll see. I think that you guys had two really good market questions there to start the stream out. Y'all should keep it going. Otherwise, I'm going to have to go back into politics again. Nobody wants that, do they? See, if I start browsing Reddit, it is gonna be politics, man. What's this little jump here in Bitcoin? I think it's just a tiny one, probably off of the jobless claims. Well, what I'm seeing right now is that the dollar went higher off of that news. The Japanese yen took a plunge, and the Japanese yen is continuing to push things. So even though I feel like that this is a really far move off of a initial jobless claims for the treasuries, it may be getting exacerbated by the currency movement. So here again, trying to say, I think the market's overreacting to that news and I should buy it. I don't think that that's a very good trade, because if the Japanese yen could continue to fall, and that would screw you over, right? So maybe I should, I said 399, we're already at 3995. Do you trade the knob spreads, asks Stefan. So I watch the knob spread very, very closely. I am doing some work on trying momentum strategies on the yield curve to try and trade knob outright. But those trades are going to be done with micros, probably for months at a time. That's probably a position that I would hold through the whole contract potentially. Day trading the knob, I have never been able to quite sort it out. I can tell you right now, it's flattening. The curve is flattening a lot. You should come over here. So this right here, this series right here, that's the knob. So I have a spread indicator that is part of my indicator suite at speculatorseth.com. I have a free version and a paid version. The free version will chart it out to you. The paid version will work on higher time frame charts like hourly and daily charts. It will print candlesticks. It will auto roll over, and it does some coloring and so forth to tell you how it to help you better understand how it is handling the interbar data stuff, because there's some complexities that come with spreads in that respect. Okay. Anyways, my indicator, up is steep, down is flat. The knob has flattened considerably since that initial jobless claims news. So, if I was going to take a trade in the knob, right now, what should I do? Should I buy the 5 and sell the 30 on anticipation of that pulling back a little bit? Or how far is it going to go? I've just found, the outrights can be a little bit tricky to sort out what they're going to do. But I've found that on a short-term basis, that the yield curve, the spread, is even more tricky. There's some serious momentum to the yield curve from what I can tell. But that's daily. That's a daily chart. So let me show you on a daily chart real quick. Actually, I put it on my my 30-minute chart. Right, so you can see it's steepened up a lot through this whole mess. And now here today, they are giving a lot of that up. There's a little bit more to give still, so I suppose we could see some more flattening today. Let's see how it goes. We're already to 4%, man. Should have taken that one. It would have been a... Now I'm looking at it and I'm like, isn't that a no-brainer trade? Well, now here's the other thing though, is that when they reach a key, key figure like that, they usually go through it. I'd say they usually go through it. So I'm not even going to say like, oh, now we're at 4%. It's not like worth trading. It could keep going. Although I do feel, well, let's see here. How many contracts was it? Oh, 37 to 9. So almost 30,000 contracts. Almost 30,000 contracts worth of selling from this news. And not any real kind of, like, look at the cumulative delta, right? Do you see? Oh, man. That's like no break at all on this. I mean, I guess you had like a little bit of a pullback, like right here. But does that really count? Does that really count? What headphones do you have? Terrible headphones, don't get them. No, I have Pioneers. Do you see? Does the logo on the... Pioneer DJ. But they are not the flagship. I opted for a set of headphones that they claim are for producing. They have a really weird kind of innovation that basically gives it like a really good bass response. I actually really like it, but some people don't. They think that it's too bass heavy. But to me, it actually sounds like what it probably should sound like. But they're not as well constructed as the top of the line HDJ headphone. So it's actually like the head pieces already kind of falling apart. I already had to, and I've only had it for a year or two. I had to replace the ear cups. Could just completely replace them with sheepskin ones. This little, you might, well, you probably won't see on the camera, but I often have like little flakes of black stuff on the top of my head because this headband like flakes off. Although it looks like it's almost all, it's like this plexi leather sort of stuff. Almost all rubbed off now. Slate head, oh, I'm familiar with that. I'm really interested in wireless headphones with extremely low latency. I found one set of headphones that is a clear outlier and is pretty good, but I still kind of wonder if it's too much. Because I really like hearing myself. Most people, well, pretty much everybody, when you start speaking with headphones on and listening to yourself, you hate it because it's not what you expect. You don't sound like what you sound like in your head, and you don't like it. But when you come in and you do it every day for a year, like we've been doing, or, you know, well, we've been doing this for almost 7 years now. You get used to it, and then I think you actually kind of start to enjoy it because it actually gives me a little bit better control of my voice. Like that direct feedback changes the way that I speak a little bit, and I think makes me more articulate. So if I'm get wireless headphones, because it would be really nice to be like untethered from the desk, it has to have really good latency still so that I can hear myself speak. And the problem is with a lot of the audio equipment that you get right now, it's like there's a little bit of latency introduced by that. Like there's like 5 milliseconds added by this and 5 milliseconds added by this. And, you know, all of a sudden you're at 20 and it's enough for you to notice. So I stick to the wired headphones. But if you see a new thing that comes out that's like instant, I don't know if it's possible to get instant, but let me know. Well, after tagging 4%, they pulled back from that actually quite a bit. So I guess the continuation through 4% wasn't a good idea. I'm not seeing a shift in the volume at all still, at least not in the 5 and in the 10. But what I am seeing is that this 6J has backed off a little bit and that the dollar has reversed a little bit. So it looks like that it is the currency that is driving this pullback and not necessarily the order flows in the 10-year treasury itself. This is super important, guys. This is like one of the things that I didn't do that a lot of order flow people don't tell you about, don't teach you, that I think is super important, is you have to be able to differentiate between when your instrument is being driven by the flows versus being driven by flows in a correlated instrument. Otherwise, you're always going to be like, well, it pulled back and the flows didn't matter, and you won't understand why the flows didn't matter or when they will and will not matter. Right now, because the currency is driving things, there's going to be these points where it goes against the flow, where price moves against the flow, and that can really hurt you. So you got to be aware of it and be able to account for it in the prices that you pick and everything. Like maybe we could get an extension beyond 4%. And if we believe that the larger term flows and the fundamentals and everything are in line with us rising well above 4% today, which I think that there's a decent case for it, maybe now is a good pullback, because we got the pullback because of the dollar and not because the people don't want to continue selling the 10-year treasury. That said, the flows have definitely kind of evened out. It's a little bit more flat. There's a lot less activity here now, so probably the best opportunities are probably past us. What is your black alert set at and how much volume? Good question. In Xeon, I think it's 3,000, but let me see. Alerts. Oh, come on, where is it? Always on top, reconstruct trades. Oh, I don't have it. Oh, it's because it's in the other one. It's on this one. Yes, 3,000. There you go. 3,000 for a block trade. So the way that I have it set up, I get rid of my camera here, and you can see all of the stuff that I hide from you, like my order entry windows and stuff. My market depth tape. I actually would kind of like to have the market depth tape like front and center for you guys, but no, there's no room for it. I have the top one is like all of the orders, and I kind of like to have this one on there because it kind of gives you a good idea of like the pace in a way that I don't feel like the DOM does, and you just kind of see it in the corner of your eye. And you can see I have it set to like there's like a display duration, so it only displays that for 10 seconds and then they start to go away, right? And then this one down at the bottom, I have that one set to only show me trades that are larger than 1,000, make a sound when they're over 3,000, and they stay there forever. And I actually normally have the time on it as well, but it looks like I didn't like set that up last time. I had to reconstruct my workspace so that I can kind of look back at, okay, when did that happen? But, you know, even if you don't have that and you're watching the DOM, you know, when you see 3,000 print all at once, that tends to freeze the market a little bit. Those aren't supposed to come out. So this is another one of those things. I don't know if I ever would have known this on my own and I don't really hear people talk about it, but I know because I worked at a bank, we have systems that split all of the orders. So the trader would maybe say market by 3,000 lots, but that will get passed on to some other system that will split the lots all out and turn it into a bunch of one lots and stuff. And that makes it so that they, it's harder to detect that it's one big guy doing it. Except for that, like if they all hit at once and there's no, the level 2 changes all at once, then you can reconstruct it. So when that happens, it's not supposed to happen because they don't want you to know that they're buying 3,000 contracts in somewhere all at once or whatever. And it tends to like freeze the market. Tends to be like all of the market makers in that area just got filled, and so now it makes it hard for it creates the liquidity hole, but it also makes everybody go like, wait, what's going on here? So sometimes it is like somebody's been caught offsides really big time. Do you have anything to monitor for volume spikes on a 1 minute? I don't have any like chart indicators up or anything like that. There are some features built into Jigsaw that kind of help you see those things. Something that I don't use, but that's probably the best tool for that, is these meters. So like if I add a meter here, wow, they came back down to those lows so quickly. You get these meters, and then, when they're up here, that means it's a really active market. Is like that feature in the TT Pro where the orders are yeah. Well, yeah, exactly. So it splits it automatically for you. Octavius is rooting for 18. Okay. There are plenty of big prices well below that too, right? Like if I go back to a longer term, like my volume profile here, right? Like it's at totally within the possibility for it to move all the way down to 112.10. Right? That does seem really far away to me. Do the treasuries have the oomph to make that happen? We'll see. Well, you can kind of see okay, the treasuries have wanted to continue selling this because they didn't pull back that far when the dollar retraced. And now the dollar has not come back up to its highs, but the treasuries already touched the low. Yeah, suppose you stepped away and you wanted to record it on the chart. But I kind of like, well, there's a couple of things. One thing is that there are indicators and so forth to show you the block trades on the chart. So that would be one thing. But you're also kind of going to see it like, oh, just all of a sudden it's going sideways. Like it was moving really quick, and now all of a sudden it's not moving very quick. Probably one of those involved, right? Of course, the better solution is don't step away. So I think that a really big factor here is that you're really only able to pay attention to so many things, right? I would argue that the thing that is the most important to pay attention to is the limit orders that are currently up there versus how much actually ends up trading. So you want to know how much of the liquidity, of the resting liquidity, is actually just placeholders, and what the latent liquidity actually looks like. Those are the two kind of things that I'm checking, right? So if I have a move and I come down to a certain area and I see more liquidity overall, that's a huge sign to me that there's somebody really big executing a large meta order. Because when those guys like JP Morgan and Goldman Sachs get involved, they have found that for whatever reason, their execution works better if they provide a little bit of liquidity themselves. Okay, so that's what that means. But then I should be seeing, when it actually trades, a little bit more trading. Like if it was, 1,500 contracts to move it, and now it's 2,000, 3,000 contracts to move it, that also very much matters, and can be, again, another sign that like you're getting a big order, and the flows are all kind of going one direction, right? Versus, okay, that's how much it takes to like tick it up once, but then it's going to trade back and forth there for a long time, and how much volume comes through there, and is there an imbalance in the volume between the buyers and sellers there, and so forth. What is the latent liquidity? Because that is kind of telling me, what do the market makers think? Are the market makers, is latent liquidity, really sticking there? Or is it like it's kind of disappeared? So at 20, it kind of looks like the latent liquidity has kind of disappeared. There's not a whole lot of people willing to bid an offer at that spot. It's kind of happening like right at the low, which is a little unusual and might be a sign that we could probably push out of this. It's probably going to be a little bit pinned to 20.5, but it looks like that in the circumstances, it wouldn't
block
be too hard.
sell.
Well, okay, so they hit 19 and they immediately hit into liquidity. So we can see that the latent liquidity is like, there's like no latent liquidity here, and then there is some here. It's probably going to be like this, right? So in order for them to continue pushing down, there needs to be a lot of volume. And so then I kind of have to ask myself, okay, well, is there somebody that needs to sell like 20,000 contracts? Because that's what you're going to need in order for it to continue pushing. I think in this situation, there could be. Like if I already had the trade on, I'd be letting it ride still. So anyways, that's like the most important thing that I think is like a real empirically based behaviors of markets that really matter, and insight that you can gain from the DOM. And so that's like the thing that I want front and center, right? Because remember, this is all about building intuition. So I want to make sure that the things that I have up are things that really, really matter. Now, a large order going through does matter. Does matter very much so. These things that kind of create these liquidity holes, those matter. Now, there's a lot of those things that you can just see it on the DOM, and you don't necessarily need it on your chart, right? So don't think, every little thing that could possibly be matter, I have to put it up somewhere, and because what will happen is it just overwhelms you, and you can only pay attention to so many things, and it will kind of mess with your intuition trying to do too much. So what I would do instead is I would only add things when you have a problem with it, right? If I have a consistent problem of not realizing that there was some fast action there that has kind of damaged the liquidity or something like that, then I would look at, okay, what can I add onto a chart or something like that, right? So for instance, I have a hard time being able to tell what the longer term imbalance between the buyers and sellers is. So I'm going to want to have something up there that will tell me, okay, is there a persistent imbalance? There is right now, by the way. I really probably should be in this trade. I thought that they were going to give me a little bit more time. Maybe I'm being too hesitant. but I kind of feel like it's too late. Yeah, they did tag 18. But so the way that I see that is cumulative delta. Shoot. That's really good. I think that's the best way to see that. You can see it on the DOM, but I don't. Most people aren't going to. Another way that you could potentially see it is the power meters, right? You could have this power meter up, and when you look at it, you can see there are more sells than there are buys overall, and here's the difference between them, because I can see where it is on the power meter, right? It's another way of looking at it. But only because I don't see that myself, so then I add it. And, you know, as you go along, you kind of got to be cautious about what you add to a chart. Because you add too much, and it makes it difficult for you to build that intuition. Then it just becomes noise. I'm just going to start wearing diapers. Well, there you go. What about depth? No, it's a power meter. So the power meter, this power meter is basically showing, since I reset it, how many buys have there been and how many sells have there been. And then it shows me kind of a power meter of how much is that in balance. So there has been a lot more sells than there has been buys, and this is the difference between the two of them, right? And so if you have that up all of the time, then you can look and you can say it and see. You can see it and say, hey, it's been sell orders this whole way. Yeah, there's a clear imbalance in favor of sell orders. There's a clear imbalance in the order flows today. You can also, I think there are some little settings in here with the power meters where you can have a snapshot and a depth power meter. And there's also, if you go into the, I don't know if it's the reconstructed trades or the summary tape, there's another power meter that allows you to kind of say, only show me the market orders over the last 5 minutes. That's useful, a way of doing it too. But all kind of different ways of seeing the same thing. I kind of like that, okay, I want to be able to see it historically, right? So I just cumulative delta. I can see persistent imbalance, right? The more of a straight line that is, the better. Seeing it that much of a straight line and I haven't taken a trade makes me a little unhappy, because that means there was an opportunity that I didn't take. And I did. I knew it. There was the spot. I even kind of saw the spots. I didn't take them. I was too scared. I can't get over like how far it's moved on this move for something that I really didn't expect them to move this much, right? So this is like, oh, I expect there to be like an imbalance and a trend and everything, but not this much. Not this much. That's throwing me off. Can absorption be predictive about short-term direction? You got to be really careful with that one. Yeah. I would say that in general, absorption does tend to slow down, if not reverse the action. But the problem is that when you're getting a really strong trend, they will just slice through it, and it will be like the exact wrong signal. That right. So, I would be very careful about looking at any one individual thing that you see in the market at the moment and say that piece of data is indicative of what's going to happen in the future. Okay. There are some things that I think do kind of help. Maybe not enough on its own, but when you combine it with everything else that you kind of know, they can kind of help you. The two that are the most useful, though, the two that are the most predictive as far as I can see is, one, persistent imbalance in market orders. If there are more market buys than market sells, and it's really consistent, there are probably large institutions executing large meta orders that will continue to be executed basically all day. Okay. That is the best predictive indicator that we have, that I have found, and that we have data about. Okay. The number 2 one that I think is kind of silly is that the market likes to mess around with whole numbers, or round numbers rather. So here in this situation, you know, when we were at 399, okay, so we're really close to a round number. We are, and then, like I said, it's not enough on its own, but then on top of that, you're getting a really strong reaction to this piece of news. You're getting really strong imbalance. Why would they stop there? They probably are going to go to 4% just so that they can say that they tagged 4%. And usually beyond that. That's another one. That's like the dumbest thing. That's why I one of the things I always say is, like, when people get really focused on candlesticks and all of these sorts of things, just know that we have more evidence and more edge in the market providing more liquidity and gravitating towards round numbers than we do any kind of edge in any of these chart patterns. Okay. But the other thing I want you to take from this is that there are things that are kind of predictive, but they have skewed risk rewards. So yes, absorption will slow it down or reverse it most of the time, but trying to trade off of that isn't worth it, because when you are wrong, you are going to be against the biggest moves. You will lose more when it's wrong. So it's probably, it doesn't help you very much. Maybe it could be included as a part of your intuitive framework, assuming that you actually have like real evidence that it does happen that way more often than not. I don't think that I do. But just trying to trade that alone as a strategy, it's not going to be profitable. While I am seeing the flows shift a little bit again, it kind of feels a lot like when we were at the 22 area and it slowed down. So, you know, in that situation, I kind of thought that maybe we would have another leg. So yeah, that's the right word. That there was going to be another leg. It happened fast. You know what? But on these moves, they've been happening faster than I expect. Probably should. Well, okay. I think that in order for me to try and take a little bit out of this, though, I think that I need to get 4% or lower. And I'm a little bit weary about the dollar here still. Right? Since the dollar has been driving a lot of that. Okay, it came up to this high, it pulled back, it's kind of edging up towards there. In order for these treasuries to go lower, well, if the dollar went higher, then the treasuries would go lower, and that would be a good trade. But I'm kind of thinking that might not happen. There's a pretty good chance that the dollar reverses again, and then you would probably see the treasuries reverse up again as well. And so that doesn't mean that I can't try for a third leg, but it does mean that I'm gonna have to get a decent price for it, because if I'm paying up 10 ticks for it and then it does do that with the dollar, I'm gonna get creamed. Jamie Dimon says he still sees a recession on the horizon. Oh no. Was as Donald Trump has said that Facebook Chief Executive Officer Mark Zuckerberg called him multiple times over the past few weeks, including after the former U.S. president faced an assassination attempt in mid-July. Oh, that's interesting, actually. So Donald and the Zuck are chatting, and maybe Mark is more, let's say, open to Donald Trump, because last time around it kind of seems to me like they spent a lot of money trying to prevent Donald Trump from getting elected. Why wouldn't he? It's clear that Trump is for sale. Why wouldn't Zuck get it? You know what? I really kind of feel like that. Watching the cryptocurrency thing bothers me so much that it's like, oh, the right tech entrepreneurs start contributing to his campaign, and all of the sudden, hey, I'm totally a pro cryptocurrency everything. Bothers me. I'm not going to say that it's like strictly a bad thing. Like, these things do kind of work that way for a reason. And the people that are driving the economy do need to have, you know, it's good for them to be involved in the politics and letting the leaders know what are the sorts of things that help their businesses and don't. But I don't think that I would do it that way. I think that I would be like, don't you know, if you're trying to get me to do stuff for cryptocurrency, don't give me the money. Don't want it. The 5-year is just still knocking on the door there, man. They gave me a little... I don't think that they actually gave me a chance to hit 4. Make sure my order entry windows there are all sharp, though. I think I need to stay engaged here a little bit. I'm tempted to just go off onto rants. We do have some, you know, there is political stuff going on. So significant political stuff going on right now, I would say, but we don't have to talk about that today. We don't want to. And it probably is better. I don't know if you're going to get a whole lot of opportunities tomorrow. So... okay, so one thing I think I need to watch for here is that we still haven't seen a decent pullback on the yield curve. So... okay, uptick there. That's funny. Did you? I don't know if you saw my head there, but like when that one ticked up, I immediately noticed it out of the corner of my eye because everything ticked up at the same time. The bids came up with it very strongly. It's actually now 2 ticks. So they're pushing it well below 4%. I actually am seeing a change in cumulative delta. All of the sudden, the S&P 500 is starting to sell as well. So that is very curious. I'm a little bit torn because that does give me the opportunity to buy it but below 4%. But, you know, it was enough of a shift in cumulative delta and everything. And the other thing is, okay, so going back to the correlation thing, it wasn't because of the correlation. So it did bid up because of flows directly in the treasury, not in the correlated instrument, right? So perhaps a sign that the flow that's been driving us down is abating a little bit. I think that means I'm just going to note this spot. Maybe because, excuse me. It may be because the S&P 500. Maybe because the S&P 500. But this is probably like we should wait 20 minutes before doing something. Wait 20 minutes. If the cumulative delta looks okay, and we're still below 4%, then I might dip my feet in the water. They're like, oh, Seth, you don't want to buy it there? Okay, then we'll just go without you. Totally baiting me here. It's totally baiting me here. Yeah. Octavius says it's time for the hero trade. You want to buy it here at 20? Or like was it like after 18? It sure is, you know, like it gave me what I wanted, which was the ability to place an order before 4%. But man, they sure did it in a way that makes me as nervous as possible about taking a trade now. Like there's been a real shift in the flows, hasn't there? I'm not going to say that it's like strictly a reversal. Could turn into it. Right now, it looks to me more like that short-term mean reversion trend as the pressure, the selling pressure is basically just, it's all of the sudden it's just gone. It's like whoever was selling it, they turned it off. There could be another leg for it, but well, probably a key spot for us to watch is at 22.5. Because that is where our seller's cost basis is. So for the book to kind of equalize back out, assuming that pressure is gone, that 2022 half is a pretty good location for where they're likely to come back to. Now, I don't even remember what I was going to say now. My mind just went blank. See if they come back up to 22 half and then reassess. That's what I'm thinking right now. I am seeing the spread shift now because we are a tick higher, but the 10-year yield is still 3.995. But I'm seeing that the 5-year was up 2 ticks at one point there, so, and that there was maybe a little bit of steepening. So I don't know. Maybe here's a test, right? Because we remember we were talking about the knob. So is there a buy the knob right here? It's at 103.28. 103.28. Let's go. Oh, you know, I haven't even taken my notes today. Question mark there, kind of signifying that we're just kind of doing a little bit of a test to see here, am I actually picking up on a shift in the yield curve or some mean reversion in the yield curve or not? What do you got here, D? So large options expiration at 109 and 109.55. USD CAD. Not for JPY though, huh? So I don't know if that helps me. That does, that happens at the top of the hour though, right? So it does matter. By the way, very, very interesting with the correlations. The dollar is higher now, but the treasuries didn't careen back down. They're basically where they were. No, dog. How did you get out? No, go away. Go away. Joe. He's just... Do it long enough, he'll come. No, I won't. I'm gonna ignore you. I ain't teaching you that you can do this every day, dog. Yeah, it was mostly about 6E. You're right. And what was the price that it was again? It was 109 and 109.055, and we're at 109.015. So the dollar may move a little bit higher here. Okay, well. If the dollar keeps moving higher and the Japanese yen keeps falling, that could continue to push the treasuries down. And I think that I could see a continuation, you know, another leg in the treasury at some point. We seem like we're in a pretty balanced spot. It looks like I got screwed there on my fill. Would have much rather have had 3995, but that's okay. I kind of thought that maybe some momentum was picking up, and then I hit into it, and it didn't. So that wasn't the best entry. I think it's probably okay. Like, look, we're right back there. It's probably okay, but it wasn't the best entry. The air conditioning turned on, and I can feel that nice, cool, fresh air hitting my lungs. Looks like Bitcoin is fading back. S&P 500 keeping its initial gains, though pretty choppy for the first 15 minutes in ES. I don't really have a prediction for ES, but I suppose that I would prefer that it goes up, huh? Because if the ES starts selling off, the treasuries might bid up again. Well, that wasn't particularly beneficial. And that kind of looked to me like the ES started to turn like it was about to dive, and then they bid the treasuries up like 2 ticks, but then they're like, oh, it's okay. So I think that we might be getting this kind of this range where you start to think that it's going to do something, and it actually just kind of stays in the range for a little bit. Because I'm still kind of thinking like 30 and might still, if we're gonna get another leg, might still be a little bit longer. Still might be a tad too early, but I decided to take it because of what I was seeing in the dollar. Which way you think the spoos are gonna go, man? They're being, that's an awful lot of tug of war going on over there, I feel. Well, there's maybe a test of the regular session low. And the treasuries are still kind of slightly bid as they're doing that too. Do you think the 30-year auction today will have a big... yeah, actually, probably. So let's come back in here and do our flows. So, let's say market rally fizzled yesterday. Strong reaction to initial jobless claims. 10-year auction. for the 30-year auction. 30-year auction could be strong. So that it is likely to push this up. The 30-year auction is. Question is, like, what are the flows going to do now and in the meantime? I'm noticing there is some steepening going on. That's why my position is not too underwater. So that kind of worked out for me. Thinking that we were going to steepen kind of allowed me to have a little bit more confidence in taking this trade. The 30-year basically hasn't moved. These two kind of dragging it up a little bit, but hasn't moved. So we could still see it like turn back down. So far, though, the trade's not going very well. I'm kind of thinking about cutting it off. If I had executed it better, if I had gotten a better entry point, I might be able to have given it a little bit more room. Of course, as soon as I get out of it, it's probably going to careen down, right? I'm still kind of getting this hint though that like the S&P 500 is still a little bit bearish. You know, it hasn't gone yet, but they're testing the bottom side, and it seems like that's giving the buyers in the treasuries a little bit of the edge. You know, the volume in the treasuries isn't really shifting. It's been quite flat for the last 10 minutes. So like really what's happened is the overall flows have been pretty flat, which is about what I would expect, but the yield curve steepened a little bit. Now, because it was a steepener, I didn't lose as much as I would be if it flattened and went up, but it is a loser. Well, that 21.5 now looking pretty firm. Seemingly moving around on not a lot at the moment as well. Ooh, okay. Wow, that was awfully quick. Oh, but that's as soon as the S&P 500 starts pulling back too. That's I don't know if I should be making anything out of all of that or not. That came back awfully quick, didn't it? Now, did I see volume with it? A little bit in the 30-year, actually, yes. The issue, though, is that it all happened without, you know, like at 20 have only 434 contracts to do it, right? Let you pick. Yeah, I see that. It just looks like a picture, though, to be honest. You're going to have to tell me more about what I'm supposed to be picking up from it. You should just post those in the interest rates room. Oh wait, is that TLT? That doesn't make sense. Oh, it's 930. Okay, I've got the scale on here quite a bit wrong. So 830 was the drop. What's this line right here that's popping up real hard? I'm starting to not enjoy this ride, guys. I'm starting to not enjoy this ride. When it came back up to 4%, I was like, okay, maybe I should just scratch it. No, well, that was such a big come off. Let's let it simmer for a little bit. And it came all the way back down again. So when I get it to like right at my cost, and I can't seem to get it a favorable tick, that really makes me go like, I screwed up somewhere, right? But the S&P 500 is turning bullish again. It does seem a little bit to me like that there was some people buying treasuries when they saw the S&P kind of like hinting like maybe we're going to go down. And now that it's turned around and is pushing the highs again, that has definitely diminished. And like those guys kind of bailed. But I think that those guys may already be out. So we may be back to a just chill at 20 half until some other flow comes in. I am seeing the dollar is not helping. That's a little bit of a frustration, is that I did catch this but it didn't really help me. Yeah, there is wholesale inventories at the top of the hour. That's a good point. That's not like a huge piece of news, but it's, you know, kind of like one of the bigger things that we've got this week. So, well, it's back up to the high end of that range. I don't know. It seems to me that the decline and the pushback and basically all of that throughout this area, though, has been the market moving around on not a whole lot. That, you know, I'm not going to say market maker games, but a little bit less liquid of a market than I would like. We did, by the way, tag the cost basis, the seller cost basis. Okay, interesting. So that time there was kind of like an attempt on a take and pushback on it. So you might see one side kind of give up here or have a decisive victory. Let's see. Well, there's an uptick at 21.5. No bid with it though.
haven't. They hit it. Those bids aren't pulling, so. Okay, significant downtick that time. We got 1 minute to the news. They're looking for a reading month over month, spot 3 versus a previous reading of spot 4. And you're not really seeing any pulling on the DOM for it. I don't know if the FX expiring will actually cause a spike, though. What's probably more likely to happen is you get pinned, and after the expiration, the market might be a little bit more free to move. Okay, so we are getting a little bit of movement. Wow, so the wholesale sales month over month was negative spot 6 versus an expected spot 3, so that's a pretty significant miss. I'm not really seeing flows come through, though. It has ticked around a little bit, but not actually a lot of market orders being submitted yet. And the dollar declined a tiny little bit. So, like, with the expirations, like, we got to think of it as, if I have an option, I have a big position, I've bought it, and then I'm up on the position. If I sell my position, that's going to cause it to go down. So if I can make the money by the option expiring rather than having to sell it, I'm going to make more money, right? So what you often see happen is, like, that battle has already been won or lost earlier in the week, and then so it just stays there. You know, it just stays there, and then after all of the expirations have, now it's the start of the next game, and then you can actually do something. That's very much the way that it happens with, like, the monthly options expirations, right? Is like, there's like that, you know, the Monday after the expiration, there's like that unclench. You know, it's like the market has a hard time going anywhere going into the expiration, and then afterwards, like, there's usually, well, as of late, it's kind of been a big decline, right? Because everybody's buying calls, but so that's how I would look at those kinds of events. It's kind of like something you've got to get out of the way before they can really do much. Can be sometimes the same thing with pieces of news. It's like somebody might have a large meta order that they need to execute, but they're not going to execute it until after the news. So sometimes you will see, like, you know, the news goes one way, but then it moves the exact opposite. And it's because, well, there was a large meta order and they were just waiting until that news. And then they started executing it. That happens a lot in treasuries. Well, S&P is still rallying here, up above 5,300. They kind of seem to be testing the bottom side of this again, but I'm not seeing too much of a push, so that do you think caused that small rally? No, because it was rallying before that. It could be though, because a wholesale sales, that's not necessarily positive, right? But I'm gonna say it's not, because the treasuries didn't really react to it. So I think that it was just probably more the S&P was testing on the downside. They didn't get a whole lot, and so then when it turned around, it's a rally. But who knows over there, man? A lot of what happens over there is just random. Yeah, so it's kind of they will build it up there, right? Well, okay, so I don't like that iceberg at 21. But you know, it will kind of tick up, but they haven't really been able to build something. That is curious, because I don't like that there's an iceberg there. 3,000 contracts isn't huge, but they did sell through it. So may actually be getting a sign that there is a seller still there. Seller's still there. He's just executing slow within the hole. At the same time, I'm looking at my cumulative delta, and over the past 10 minutes, and I've been in this for probably like 40 minutes now. 20 minutes. I've been in this for 20 minutes, and it's been like the longest 20 minutes of the month. But it does look like since I've gotten into it that there is a slight increase in cumulative delta. So the flows are not going my way. So I'm still kind of sitting here thinking, I think that I knew I was getting into the hole and that maybe I was a little bit early, but then I picked a poor location within the hole. And so I'm not ever able to get any favorable excursion, and it's just really frustrating. And then I guess the other thing on top of that was that the yield curve did steepen up like a tick or two. I remember when I looked at it, I said 103.28, and now it's 103.34. So that's like 2 ticks of steepening. Like, look at the 30. The 30 is maybe possibly turning down. I remember Norden said don't focus on the large volume, but the low volume. Yeah. Well, part of that is that the market maker is going to have more of an advantage in that low volume. But it's also like, it is true that those can be kind of places where you might get hints. And the hint that we're getting is not a good one for my position, right? They did finally build something at 21.5 as well, so. Did the 30-year tick up, though? It looks like the 30-year is still where it was. The dollar's not helping. Japanese yen not helping. S&P pulling back a bit. Up in there they finally go. Okay. I guess I'm out. Well, I gave it the best of chance, but it was a bad trade. It was just a bad trade. Back to 399. It's kind of curious because I do remember it being at 399 and being like, oh, I missed it. And then... Don't feel very confident in the short side anymore, though, right? Well, how much of this did we retrace? It's about half. I see your picture, DPP, but that just looks like a liquidity hole to me. So like what I'm looking at right now is still like I think that the loss had more to do with poor selection of price within the range and the steepening. Which is better that it steepened than that it flattened, but that it was steepened and it was up was bad. Because if it steepened and it went down, then it would have been really good. But not enough for me to say like, this is a reversal. I should like flip around and go long the treasury, right? Doesn't mean it won't happen. I just don't think it's enough for me to feel like that's happening. Also, on this push back up here, the curve flattened back out, so... Yeah, that was a good spot to get out, though. That was a good spot for it was like, yeah, this flow that I'm looking for, it's not happening. I don't think you can diddle in the middle anymore. Well, like the issue is that we were moving in a 5 to 10 tick range in the micros there, and I bought the top end of that range. So it wasn't even that I was diddling in the middle, right? If I had taken 3995, probably would have been a little bit different. At least it wouldn't have been as bad. Or if I had caught 399, then I probably would have been gotten out at a scratch. Either way, I didn't predict the flows correctly, so either way, it's going to be a loss, but could have been, you know, an okay or just middle, whereas it's a full loss instead. And like my average loser is 10 ticks, my average winner is 10 ticks. So it's okay. I was actually 12, so it was a little bit more than that, but it's okay. Now, another perspective I could take is, what if I had gone short? I'd be up 15? 15, yeah. I'm not sure if that would have been a huge victory either, so. Of course, they could keep going, so. I am starting to consider more flipping around and chasing it. Because now I'm looking at it like, okay, so are they gonna cross back here and push the other side to the buyer cost basis. Because they pretty much came out of like they had a hard time getting above this, right? They had a really hard time getting above this. Now they're there. They start building some volume up. That's, you know, if the flow long continues, that is. Maybe a bit of a rebalance. See, like, the yield curve steepened a tiny bit, but I can still see a scenario where over the day it flattens more. Yeah. Scalping the yield curve. That people do it, but I don't know how you make money doing that. With the fees and everything on top of that. Doesn't make sense to me. I don't know, when I think about it like bigger picture. Yeah, obviously it pulled back a little bit, but I think that we could, again, 112.20, or maybe just 112 even. Maybe next week. I think one of the things that really messed me up on that trade too, by the way, you can zoom in on this. This whole thing right here, right? That was where it got me back to break even, and I thought, okay, maybe this can work out. Then we're sitting through there. Okay, when it came up above there, that's where it got out. Possible that could have happened, so it wasn't a crazy trade. And I think with my flows, I think that these things should dominate until the auction. I do kind of, I wouldn't be surprised. I think I'm just contradicting myself here, but I think that you could see a little bit more selling before we're done here today, but that you will see buying around the auction. So it could be the case that like the auction and everything else that we retrace that. Man, so I didn't realize how strong the rally in the S&P 500 was. So we've basically rallied 100 points from the overnight. That's actually really big. How is that? Well, it's still within yesterday's range, though. Huh. But I all I have is to think about the trade again, and I'm just ruminating about that. And I'm like, oh, we could go into some other things, but nah, it's okay. There's 399 again. Quiet. Very quiet there. Down tick. I'm keeping an eye on the 30-year there. Okay, they're giving me 3,995 again, which is like where I feel like I should have originally been at. Okay. The book seems to be reacting to those up and down ticks, though, doesn't it? Like, it did both sides there. Okay. So I had an order in there and I canceled it because I didn't like what I saw in the 30-year. Seeing some orders going off there, though. Want to come up with a strategy trading food? Well, the difficulty is it's very, very difficult to predict what the result of the auction is going to be. There is some data and so forth that you can kind of use to judge those things, but we don't have access to it. And even if you do have access to it, it's still notoriously hard to predict. So, and on top of that, the moves that we've been seeing this year is usually not like that. The way that it usually goes, honestly, the way to play it is wait for the auction to be over and then buy it. That used to be like a no-brainer trade for a while, but it's, alas, those days are past us. Even though I'm a bit miffed about the way that trade went out, I'm feeling a little bit more confident in doing some things. You know, I kind of think that I was being too gun shy. We got icebergs on both sides here, 21 and 21.5. And I am seeing a potential shift in the flow. Ah. There was more selling through that little battle than there was buying, and it is causing a possible turn in the cumulative delta in ZN. And there was a pretty decent take in the 30-year as well. S&P continues to rally there. The dollar pulled back considerably. Japanese yen kind of turning back down. Okay, so it's come down to test it. Kind of at a standstill. Oh, okay. Only a few orders went off and all of the bids canceled. That's funny. So I'm not sure if there actually is an active buyer out there. It's just the seller and the market maker, maybe. Let's see. Could be wrong. I could be wrong. Yeah, there's, yeah. Okay, so 611 that time. And the 5-year fell first, too, by the way. Like, we're flattening out again. Flattening out again. This is kind of more of the flow that I wanted before. And I'm seeing, like, a more actual orders. Like, we had that one period where it fell down like what 5-6 ticks like it just did, but in that situation the amount of volume behind it was really weak. This time I'd say the volume behind it was kind of more normal, and we're starting to even see some decent icebergs cut through as well. Okay, 1971 on the offer. So there is a buyer. At least a little bit of a buyer. And the SPOOs continue to rally. And there's the 5-year kind of doing a take. The other two not going along with it though. Biggest issue right now for the short side in the treasuries is that the 30-year needs to start seeing sell volume below that 122 even. This is probably a good place to recenter it. Uptick, but 5K iceberg in the way. Well, that 5K orders kind of takes my cumulative delta back to unchanged, though. So it's not necessarily suggesting to me more trend. It's kind of suggesting to me, let's continue to dink around 20 half. Only 535 to take 20, huh? Is the Japanese yen fall? It is. So it might be the currency dragging a little bit. Oh, I saw your comment on Reddit yesterday about why traders shouldn't trade MES. That's funny that you guys are starting to recognize me when I post, because for a long time I was like, I post and like nobody knows who I am, and it's hilarious to me. But yeah, so by and large, the vast majority of retail traders go and trade MES. And the issue with MES is that most of what you're seeing over there is noise, man. Today is maybe a different situation. Today is a situation where you could potentially come in there and say, well, that initial jobless claims report kind of shifts things a lot and is probably a good reason for some of this bearishness to reverse. And we were seeing the bearishness reverse and kind of the volatility come out of the market anyways. So buy it. Would you have gotten like the full 100 ticks that we've done so far and whatnot? You know, well, maybe not, but you know, there was a good opportunity there for that you could have found from being informed. Okay. But the number of situations where you get opportunities like that in the S&P 500, like they really have to be really strong ones. Otherwise, like, especially if you're taking a trade where you're only in for like a few minutes, like there's so much noise there. It's really hard to make trades like that. And what most retail traders are doing is they're just looking at what the ranges are at that time and saying, I will have a target that is within the range and I will have a stop that is outside of the range. Right? If you do that, you're going to win most of the time. It's not a profitable strategy in the long run, because what you're doing is you're taking on risk. So when you get into a risky market where the risks are coming out, you tend to get slaughtered in that kind of action. So it's not a very viable long-term edge on its own. Like, if you have a really good edge, and then you add the risk taking on top of it, that's when you can really juice up your profits, right? But on its own, it's not very effective. And that's what most retail traders are doing. CES is really good at just moving, is what its thing is most. And so you can be taking tons of trades and think that you're actually doing something when you're not. Like, I saw one person respond to that and they're like, well, but you know, you get more trade opportunities, and if you're going to learn, don't you want more trade opportunities? Well, yes, but as long as there's an actual edge behind the opportunities that you're taking. If you're winning or losing is mostly to do with luck and you don't realize it, you're actually giving yourself bad training, right? If you go over to the treasuries, you know, you really kind of have to predict the flows to make a call in the treasuries. They don't just like move around for no reason. You have to have actually caught something for the most part, especially if you're going to make more than like 2 to 4 ticks in ZN. So then you really do have to have an edge. See, and then you can learn. And the treasuries gives you information that ends up being applicable to every market. So I really feel that the treasury is a much better place to start. If you were working for a firm, they or like the prop firms of old, they would start you on the treasuries. Treasuries are hard to trade, don't get me wrong, but you learn more from trading the treasuries than you do other instruments, I think. And what I feel like you mostly learn from the ES is random. Another way of approaching this is when I spoke to traders at the bank, the few opportunities I had to speak to them, because I wanted to trade ES, and they laughed. Because to them, it was like, well, that's what everybody wants to do. But I don't, they were saying that they didn't trade it because it was mostly random. It was hard. They had some people that did it, but what they were doing was mostly like comparing the index to the actual cash and arbitraging and that sort of a thing, right? These sorts of like technical analysis pattern things, they thought that it was a crapshoot. So when I came over and I started doing it, I was like, do the treasuries. And then I had a stint on the ES, but I'd say overall, I had periods that were okay, but overall, I didn't feel like it was worth the risk, the extra risk and the stress. So that's why I don't like it. And like, that's the thing. Like, probably 95% of traders, they only ever trade ES. And I'm just saying, like, what if you traded something else? How would our little community do differently? I think that at the very least you would last longer, because it seems like MES is like not taking a lot of risk, but actually it is, especially if you decide to hold on to a long against like 100-point move or something like that. That'll hurt. If you trade ES, your dick will fall off. Have you? Is there some sort of a story you want to share with that? You have a friend that something happened to a friend? Sounds awful. Well, now I'm definitely not going to trade it. That's what I should do, Octavius, is right. I should give them some sort of BS answer that's just meant to scare them, instead of actually giving like a real answer of why I don't think that a retail trader is very fertile ground to build an edge in ES. But happens to me when I have a few bad days. Oh yeah, that's another. So the thing that always frustrated me with ES was like, I would have these situations where I had a long and I'm really trying to hold on to it and everything, and the market's making it difficult and it doesn't go, and then I have to give up on it and it goes, and then that's like a 10 or 20 point move, right? And I could never seem to get those. But then, you know, when it moves against you, it happens so fast, right? Happens so fast, and then all of your profits are just dashed. And that was so frustrating. Was like, ES will trend so much, and yet catching and holding on to that trend was so difficult for some reason. And, you know, that's like one of the big things that I think is really attractive to the treasuries, is that when a treasury gets on a trend, it's the easiest trade in the world, man. I would say most of the time, you know, you get a trend that is mostly driven by a news-based move, and then you're kind of just, you know, you've already missed the trade and you're just kind of fighting for the leftovers. But those days where a trend day happens in the treasuries, and it's often something that you can be informed about before and kind of expect that, hey, we might have a trend day here, right? And when those happen, you'll hit into it. You'll never have a tick against you, and you could just hold it all day, and it's the easiest trade in the world. Now, on the split side in the ES, if you happen to catch a good short, then those are amazing too, but those are rare. The best is when there's some sort of a market panic forming and the treasuries start bidding up aggressively, like we had last Friday and on Monday. I guess on Monday it was really more Monday morning, because by the time we came in, it kind of had fizzled out. Little bit of nibbling at the bottom side of the range there. See, on this one, I was able to properly catch the range, and so even though it hasn't come out for me yet, I'm a lot less stressed about this trade, right? That first one was really grating on me. It looks to me like the 6J is thinking about pushing the lows. It's a lot closer to its lows than the treasuries are theirs. Hey, there's a good down tick. One of the things that I think is like that what is best is like there's a big iceberg and they get through it and then it takes the next 2 ticks on nothing. That's when some really good downtrends can start. Now, with all of that said, I am seeing, like, coming back to cumulative deltas, because this is kind of like, okay, we're getting a pretty okay trade going on here, but now it's more to the management side of it. Okay, we've got that trend coming in the 30-year, but the 5 and the 10-year, it's kind of fuzzy. It's kind of fuzzy. So this may be one of those situations where it continues to be flat until it breaks the low. If it breaks the low, then you start to see more volume come out. But until that happens, we'll probably have to be a little bit vigilant here. Okay, also there is some reloading happening at 19. Down tick. Somebody hit it there. Some orders went off at 18, but then the bid firmed back up. They might be trying to build a new base here at 19. Granted, there was kind of a base there at 19 a long time ago, too, right? 19 was kind of that spot that they had a hard time getting above for a long time. Somebody's posting a picture for us again. Oh, it's too big of a picture, dude. Okay. That's an old picture. It's already come back up. Oh, no, wait. That can't be. It's somebody else. I'm wrong. I already pulled that picture up earlier. Okay. Let's see. You got 10 minutes left. We did get a pretty decent downturn there. It is moderating a bit. In fact, might even say it's more than moderating, because that's a decent take there at 20. And the 30-year ticked back up. Granted, it's below 122 even, and that this is this whole thing is that it's just kind of been hovering there, and they haven't been able to get the 30-year to sell below that. So if we break the lows, 16 should be a bounce. Yeah, I agree with you. Like, the next target is definitely 16. Let's not say bounce, but like the next major target area is definitely right there. You can see all of the volume at it. There's a couple of those spots though. But I don't know if that's gonna happen. Right now it's showing us the it's giving us the higher low reversal kind of setup, right? Kadoosh, kadoosh. That's what they're trading it on right now. I wouldn't trust that, but they're kind of showing it to you at least. This is exactly the kind of situation where a setup like that would fail hard. Like if we do break 18, I think it'd be worth adding contracts, man. Because there's gonna all of the price, all of the price action traders are taking along at the moment. Gives you an opportunity to trade against them if it actually gets there. I'm still kind of seeing the actual volume in the 10-year being a little bit iffy, and it's probably going to be the 30-year that actually decides where we go. And the 30-year hasn't ticked above 122 even, but it did have a little bit of a gap up here, so. See, then the bid at 121, 131. So we just lost all of that juicy downside that we had. S&P 500 still rallying. We got 5 minutes left. And then I have to close the trade and leave, and it probably does something crazy. I always wait until I'm done to do the thing, right? Okay. You know what? The cumulative delta is actually coming out on the high end here. I think that I need to bail. I think I need to bail. Okay. I don't like the way that happened, though. Okay. That's a little suspicious, don't you think? I don't know. Am I reading too much into 8 lots? But like, as soon they hit it as soon as I offered into it. Well, I find that a little bit disconcerting. So part of the issue here is that I've only got like 3 minutes left, so I might as well scratch it. But like we're right at seller's cost basis. So this is either where it stops and turns around again, or it turns into a real reversal. And at the moment, the flows are in favor of the reversal. So it's probably better for me to scratch it now while I get the chance, right? Not the best week. 0 for 3, except for, one was a scratch. Actually, I would say that the first one was kind of technically a scratch, but I think I lost 5 ticks off of it. So, it seems bad, but it's not actually. It's not actually bad. I think I just really want to win for whatever reason. Another attack at the downside isn't outside of the question. Waiting for a long today. Yeah, and I kind of think that with both of these opportunities I took this week, they were kind of like, okay, something could happen, and it didn't quite actually happen, but it wasn't like it was like completely wrong or anything like that. So, sometimes things just don't work out. You're expecting a flow and they don't happen. That's better than you're expecting a flow and the opposite happens, right? Man, Bitcoin has been on a wild ride. I'm just kind of looking at everything before we go here, but the only one that was really significant was Bitcoin. They had a little bit of a jump. They had a little bit of a jump for the news, and then it fell out. But then as the S&P 500 turned bullish, eventually Bitcoin decided that they should be bullish too, and they cleared it out and got a really good run. Well, there was another tick or two, so getting out where I was is okay. I could have made 11 ticks on it, which kind of sucks that, like, so when it goes like right to your target and then you had to have had the limit order on it or you wouldn't have caught it, that's tough. But I usually don't treat it like that. I usually like to see it come to my spot and see how it acts and then decide if I want to hold it for longer or not. But oh well, it's okay. Let's see where it goes later in the day. This actually, so thinking on it here again, because I'm like, if it comes down to these lows, if it comes back to like 19, I think that would be a really good spot to kind of like really add onto it and pile on it, because there are going to be people trying to trade this higher low sort of setup. But the next major flow that we got coming is that 2 hours from now, you will have the auction. And we have some signs that the auction is going to be positive because of the way that the yield curve has been going and so forth. So while the 10-year auction was pretty bad yesterday, we got some hints that 30-year auction could be good. Don't quote me on that, because if I'm wrong, it's going to be like super wrong. But if it's correct, that could be something to retrace this gap, right? So that's what I would keep an eye on if you're going to continue to trade. But for me, it's time to get going. So I will see you tomorrow. In the meantime, stay excellent.